Hello, and welcome to today's VyStar webinar. Thank you for taking the time to join us. My name is Valerie Mast, and I'm the Assistant Vice President of Mortgage Sales at VyStar Credit Union. Today's conversation is designed for renters who are asking an important question. Does it make sense to keep renting, or is it time to consider home ownership? Some people are better served continuing to rent, while others may be ready to explore buying a home. Both can be smart, responsible financial choices depending upon your situation. Wherever you are in that thought process, this webinar is built to help you feel more confident, more informed, and more in control of your decision. So today we will cover the following topics: understanding the pros and trade-offs of renting versus owning, identifying what makes sense for your financial reality right now, avoiding common pitfalls that create unnecessary financial stress, and seeing how VyStar can support you no matter which direction you choose. At VyStar, we believe financial progress looks different for everyone, and you do not need to have everything figured out to take a meaningful next step. In fact, VyStar recently partnered with TransUnion on a financial stability study across the Southeast. It found that nearly 40% of adults say finances are their #1 source of stress ahead of work, family, or health. So this webinar is about giving you clarity. It's about helping you understand your options, and most importantly, it is about meeting you where you are and supporting you on your path forward, whether that keeps you renting or leads you toward homeownership down the road. To ground this conversation in real renter experiences, I'd like to introduce Ashley Stewart, Executive Director of freerent.org.
Thank you, Valerie, and hello, everyone. When we talk to renters, one thing comes through clearly. People are thoughtful about their choices. They're weighing trade-offs, planning ahead, and trying to make smart financial decisions. What we're seeing across the Southeast and what the VyStar Financial Stability Study highlights is how much housing costs are shaping those decisions. Across the region, cost of living and housing affordability are major factors for households. In many markets, housing takes up a meaningful portion of monthly income. And even in areas that have historically been more affordable, like Jacksonville, those costs have steadily increased over time. So for renters, this creates a very real set of considerations. How much of your income is going toward housing today? How predictable are those costs over time? And how does that impact your ability to save, pay down debt, or plan for what comes next? But just as important, many renters are asking a bigger question. Should I keep renting, or should I be thinking about buying? And the reality is, there's no one right answer. For many people, continuing to rent is the right and responsible choice right now. Renting can work especially well if you value flexibility, if your job or life situation may change, if you're not sure where you want to settle long term, or if you prefer not to take on maintenance, repairs, and unexpected costs. It can also be a strong financial decision if you're focused on building your foundation, if you're paying down debt, if you're building your savings, or if you want to strengthen your credit. Renting can give you the space to focus on those priorities without additional financial pressure. At the same time, some renters are starting to think about what it would look like if they want to own. And one reason people consider home ownership is the opportunity to build equity over time. Instead of monthly payments going entirely towards rent, a portion of a mortgage payment can go towards owning an asset. That can create long-term financial stability, and for many families, become part of building wealth over time. But even with that benefit, timing matters. The question is not just, do I want to buy? It's, am I financially ready to take that step in a way that sets me up for success? And for many renters, what is holding them back is not motivation. It's a few key financial factors: monthly affordability, credit and payment history, and savings. So a helpful way to think about it is this. Could you comfortably handle a consistent monthly payment that fits your budget? Do you have a track record of making payments on time? And are you building savings beyond your monthly expenses? If the answer is not quite yet, that's okay. It does not mean homeownership is out of reach. It just means there are a few steps to focus on first. And for many people, that's exactly where they are. They're doing the right things, they're managing their responsibilities, but they want more clarity on how today's decisions connect to future options. So this conversation is really about helping you understand where you are today and what your next best step looks like. Not what you should be doing, not what someone else is doing, but what makes the most sense for you, your life, your priorities, and your financial goals. Because whether you continue renting or begin preparing to buy, both paths can be smart, responsible decisions when they align with your reality. So as you're thinking through all of these factors, cost, flexibility, long-term goals, there's another important piece to keep in mind: protecting yourself along the way. As people search for housing, especially online, scams have become more common, whether it's fake listing or fraudulent application fees. And this is not about creating concern. It's about helping you feel confident, recognizing what's legitimate and what's not. That's an important part of making smart housing decisions today. Here are a few simple things to watch out for so you can protect yourself as you search and apply for the right housing options. Look out for fake listings and application fee scams. There are some simple red flags that you can recognize to see if something's legitimate. Requests for money before you have seen the property. Prices that seem far below market rates. Pressure to act quickly. Requests for gift cards, wire transfers, cryptocurrency, or unusual payment methods. A legitimate landlord will verify your identity, allow for a showing, and use standard payment methods. If something feels off, pause. No opportunity is worth putting your financial security at risk. So, whether you choose to continue renting or start thinking about buying, the most important thing is that your decision aligns with your financial reality and your goals. That clarity is what helps you move forward with confidence no matter the path you're on. So now I'll turn it back over to Valerie to continue the conversation.
Thanks, Ashley, for that great information. Ashley covered how to protect yourself from scams, but there's another layer of protection that is just as important to consider, and that is how you protect yourself after you move in. Because finding the right place is one step. Making sure you are financially protected once you are there is another. I'm going to turn it over to Tamara Nahr, Senior Vice President with VyStar Insurance Agency, to walk you through what that looks like and how renter's insurance can play a role.
Thank you, Valerie, and hello, everyone. A key part of financial wellness is protecting what you've worked hard for, because even with smart planning, life can be unpredictable. Events like a fire, break-in, or someone getting injured on your rental property aren't planned, but they do happen, and they can create financial pressures very quickly. Without the right protection, those situations can lead to unexpected out-of-pocket costs or even debt, something many renters are trying to avoid. And what we often see is that renters may not realize how much of that risk they carry themselves. A common misconception is that a landlord's insurance covers everything. It typically only covers the building, not your personal belongings inside. Without your own policy, you're missing an essential layer of protection that could cause a huge financial setback. The good news is there's a simple, affordable way to add protection as part of your financial plan. So here is a little renter's insurance 101 for you. Renter's insurance generally covers 3 key areas: your personal belongings, such as furniture, electronics, and clothing; liability, if someone is injured in your home or your rental property; and temporary living expense if the unit becomes uninhabitable. Many people are surprised by how affordable and flexible this coverage can be. Policies can be customized to fit your needs, so you're not overpaying or leaving gaps. It's also important to understand how claims are paid. Some policies account for depreciation, while others cover the full costs to repair or to replace. That distinction can make a significant difference when filing a claim. Now, here are a few simple steps to help you choose the right coverage. First, take a home inventory. Your belongings can add up very quickly, and many people underestimate their value. You also need to understand your liability exposure. Make sure you're protected if someone's injured on or in your rental property. You need to understand what your policy includes. Certain policies exclude things like high-value items, jewelry, or art, which require additional coverage. Finally, balance deductible and premium. Lower premiums often mean higher deductibles, so choose what is manageable for you. And most importantly, work with a trusted advisor who can guide you through your options. The goal isn't just to have insurance, it's having the right coverage for your situation. At VyStar Insurance Agency, we help renters compare options and find coverage that fits both their needs and their budget so they can have peace of mind. One last thing to keep in mind is protecting yourself when filing a claim. The best advice I can give you is to prepare. If you need to file a claim, your insurance company will typically ask for your policy information and details of the incident, photos or videos of the damage before repairs have begun, a list of damaged items with receipts if available. The more organized your documentation, the smoother the process. And when it comes to repairs, it's just as important to protect yourself. Always verify contractors' licenses before hiring anyone. Get multiple quotes so that you can compare your options, and also avoid large upfront payments. Ultimately, protecting yourself isn't just about having insurance. It's about knowing how to use it and how to protect yourself when it matters most. Because at the end of the day, this is about peace of mind. It's about safeguarding yourself and your financial future. Valerie, I'll hand it back to you to help us tie this all together and talk about what comes next.
Thank you, Tamara. That was incredibly helpful and such an important reminder that protecting your financial stability is part of the bigger picture. Now, for some of you listening, you may be thinking, I'm renting today, but I do want to eventually buy a home, a condo, a townhome. What should I be doing now to prepare? If that's you, the good news is you don't have to have it all figured out today. But there are a few key financial areas lenders will look at when you are ready, and understanding those early can help you move forward with confidence. When you apply for a mortgage, lenders are generally focused on three things: your debt-to-income ratio, your credit profile, your savings. Let's walk through each of those. First, your debt-to-income ratio, or DTI. This is simply a comparison of what you owe each month versus what you earn. So things like credit cards, car payments, and student loans all count toward your monthly obligations. Lenders use this to understand how much room you have in your budget for a future mortgage payment. The goal is not zero debt, it is manageable debt that fits comfortably within your income. Second, your credit. Your credit helps lenders understand how you manage payments and borrow over time, and it impacts more than just buying a home. It can affect apartment approvals, deposits, insurance rates, and even utilities. The good news is credit improves through patterns, not perfection. And there has been a recent shift in how credit is being evaluated that is especially relevant for renters. In fact, this year, mortgage lenders and federal housing agencies began adopting updated credit scoring models for the first time in decades. These newer models look beyond traditional credit like loans and credit cards. They can also factor in things like on-time rent and utility payments when those are reported. So if you have been consistently paying your rent, that is a positive financial behavior that may begin to work more in your favor as you prepare to buy. It is part of a broader effort to give a more complete picture of how people manage their finances day to day and to open the door to homeownership for more people. That said, your credit is still just one part of the equation. Lenders will also look at your income, debt, and savings. When it comes to your credit, there are 4 habits that matter most. First, pay all of your accounts on time every month. Payment history is the single biggest factor. Second, focus on paying down high interest balances when you can. Even paying a little more than the minimum can help reduce debt faster. Third, keep credit card balances under 30% of your limit. Lower is even better. And fourth, avoid opening multiple new accounts at once. Avoid closing older accounts unless there is a clear reason. Time and consistency are the biggest drivers of progress. Finally, savings. Lenders will look to see that you have funds available for a down payment. but just as important, you want to build some level of emergency savings as well. Because home ownership comes with ongoing costs, and having that cushion helps protect your financial stability over time. Down payment funds, closing cost funds, and emergency savings all work together. Our goal is to help you understand how much you realistically need, what programs may reduce upfront costs, and how to create a plan that moves you from renting to owning with confidence. You don't need to have everything saved today. We're here to help you build a clear, achievable path forward. So how do you start improving these areas? A big part of it comes down to how you manage debt today. Here are 3 renter-friendly strategies that we recommend. First, list your debts by interest rate, not balance. Higher interest costs you more over time. Second, make at least the minimum payment on every account every month. Then put any extra money toward the highest interest debt. Third, be cautious with consolidation. Only consolidate if it truly lowers your interest rate and simplifies your payments. Debt reduction is not about speed, it's about consistency. Support exists through nonprofits, housing counselors, and trusted credit unions like VyStar that focus on education, not pressure. So if home ownership is something you are thinking about, the takeaway is this: you do not have to rush, you do not have to be perfect, you do not have to figure it out on your own. The steps you take today, managing debt, building credit, and growing your savings, are the same steps that create more options for you in the future. Whether renting is your long-term plan or a step along the way, here are a few ways VyStar can support you after today. First, if you're focused on improving your financial foundation, we encourage you to explore VyStar's financial fitness resources at vystarcu.org. These include budgeting tools, credit education, and instructional videos that can help you create a realistic plan without judgment or pressure. If protecting what you already have is top of mind, you can connect with VyStar Insurance Agency, also on the VyStar website, to learn more about renter's insurance, what it covers, what it costs, and what makes sense for your situation. And finally, if you're a renter who may want to buy a home one day, even if that's years away, VyStar offers first-time homebuyer education and early-stage guidance designed to help you prepare, not rush. You don't need perfect credit. You don't need a timeline. You just need information. As we close this webinar, we hope you leave feeling more informed, more confident, and more supported. Thank you again for spending your time with us today.